Afternoon. You can see the fun and games we all had in the S&P last week. Now, that weekly candle belies what really went on. But I'll go on and show you on the daily chart. Now, we've got our weekly pivot at 2684. Okay, so hold on to that thought. Our daily pivot is at 2654, and as I'm doing this, the market is trading at 2638. We've had a bit of a rally in the FTSE, but I think we need to separate those two because the FTSE's got its own reasons for doing what it's doing, and that's that. Obviously, when Wall Street opens, we should see a bit more move. Hang on. So, as I said, you know, we are below the weekly pivot. We are below 2673, which is the first Fibonacci number. Now, that week we had last week was a major, I think, for the S&P turning point. If you can see here that we actually captured the 9-week average, and the 9-week average, as you can see if I pull this up here, over here, the 9-week average was at 2804. Now our high on the week was at 2800. So, you know, it's near enough. What we want to know now, where do we go from here? Well, the S&P has a different little pattern to it than the FTSE. So let's take a look at the daily chart, and then you can see basically just what a nightmare it was. So you can see what sort of week we had. We discussed this bit of the market last week. And this bit of the market, I mean, it was very difficult to trade. Now, we were lucky in so much as that we had the previous week's pivot point, and that was at 2785, and we were short. But it moved so quick. I mean, I did scale in buying some back, but we bought the balance back obviously on Friday, because I don't see the point of running stuff over the weekend at the moment. But you can see what we did last week. I mean, it really wasn't great. You know, we gapped open on the Monday, Tuesday, Wednesday, Thursday, Friday. It really didn't even pause for breath. Yes, we thought it would, you know, close the gap, but it didn't just close the gap, it annihilated it. And the thing also to remember is that we've actually broken below the 200-day moving average. Now, that in itself is quite significant. You've got to look at these two daily averages, okay? They are used, we use them, I use them as resistance levels only. So you combine your pivot points with your Fibonacci's, with your pivot point and your pivot point analysis that I've put onto the group, and you try and marry up some sort of resistance. Do we have resistance 3 times at a certain level? That's what I'm going for. Now, you can see this daily chart on the S&P really isn't that overbought. So we're trading at 2633 at the moment. So let's see how we go when we open. If we take out this level here, which is the 2603 support, you've got to go across and you've got to look at these yearly lows. We all know what this is, okay? We've said it enough times. The 2532 support beckons. Now, there are some that are saying this is a double base. Personally, I don't believe it. You know, but you know, that's just me. I think if we take out this here, which is that 2603, we're going to go to 2532. Now, obviously on a Monday, we try and not trade and try and get used to what we're going to be doing through the week. So let's see how today unfolds, and if we do get a bounce, I think the safest thing is to sell into any rally, and I would once more be looking at that 2684 to go short. Many thanks, and I will catch you this afternoon.